Alrighty, traders, let's carry on this forecasting process here and trade review for the S&P E-mini here. Just went through gold and oil. Now it's time for the S&P E-mini. Again, I'll take you back to where I left you before Thanksgiving. Here for the ES, this is the screenshot from the video that I did for you guys. The main call here was to look for upside. But if we were to pull back, especially to look to be buyers right around the round number of 2,000, there's a lot of trading commitment around 2030, and really breaking below that or about 7 points above that would be a trigger to be long or short, up or down, just like I showed you on gold. Bit of an air pocket that could pull us down into the 2016 level. A lot of trading commitment here. Expect that to be support. Never came to be. All we did was ride on top of this balance beam right here and go up and tag this target. This was 2072.25 there, and well, look what happened. Not so much of an issue to hit the target, but to see that the traders have done something there. Here's that initial impulse right here, and we got up just a point or two higher than the target, and you can see we had a good sell-off as soon as we hit that target. That's what I mean by a key resonant zone. So we had never been there before. That was the price point I threw out. Within a point or so around that price level, we got a huge resistance swing put in, and one of the biggest sell impulses that we've seen. Recovering the floor here, now we've got a new scenario, and that's what I've spelled out here. We've got a lot of trading commitment here at the top, and we're above that trading commitment. That is enormously bullish. I sound like a broken record, but that's what it is. What you see in a lot of bad markets is price moving up with not a lot of commitment towards the top. That's the opposite of what's happening with the S&P, the NASDAQ, the mini Russell, and the Dow. Is as these bullish markets are continuing to move up, there's a lot of trading commitment at higher levels. That's why we were able to recover as quickly as we did on the one real nasty sell-off in October. And where we are right now, 2076s, we're just over 2070 here, which is breaking back over the dominator. And the next key upsides to look for are new all-time high targets: 2082.50, 2092, and then show me 2142 even at the top. Another trade scenario here is if we start to break down, so really we get below about 2065 and give that a couple extra points, we start trading below this heavy commitment area, and that could open up a good short trade. Look for this spike here as a rest stop at 2050s, and then down to this level here at about 2038s, and you would expect that to act as key support. If it happened to break down, you've got one more century below at about 2011, and again another nice air pocket below that one. So if things break down, you know exactly where we're going and what to do with your stops and targets. Those are the three key price points below where we would break down. If we get below the round number of 2,000, that would be really something to take note of, as we would be below all of this recent trading commitment, and that would be for another video. But really where we are right now, we're bullish. We're staying with this bull trend here, and you know, with price breaking down here 10, 20, 30 points, you expect the trend to be bullish until it's not. So on any pullbacks here, you would look for a resumption of the bullish trend, as well as continuing to pursue your bullish stock setups, your breakouts to new highs, and your bull trends that have pulled back and continue to reattack those highs and break out yet again. Where you're not spending your time is bottom feeding stocks that have been essentially going in the opposite direction of the market. Just let those things go, follow the strength, use the balance beams here and the S&P to help govern your trades, and it's just rinse, lather, repeat. So there's the battle plan for the S&P E-mini. As I mentioned for gold, this is going to be the same kind of deal where we've got an area that's highlighted that could be challenged, and we might see a break above and a break below, and it might have some volatility in this area here. But for the very near future, the call would be to be long north of 2070 and to be short south of about 2065. So I've got 2062.50 here as a entry price point, but that's the trigger zone for longs and shorts position trading the S&P until price does something different. So there's your view of the S&P. Make sure you look at that link at the bottom of this video here. That's how you get in the live room. I'll be trading live Tuesday through Thursday this week, and client training Friday. In fact, stay tuned for the next video that I'm going to post, and you'll see some great day trade performance, and that'll be coming up here as soon as I get off of this one. So we'll see you back in the live room.